Here's the latest bombshell in the Usain Bolt SSL saga. SSL may have been using client money to run its operations. I'm Kalilah Reynolds, financial journalist and educator based in Jamaica. Well, over the weekend, Finance Minister Dr. Nigel Clarke dropped the last 2 pages of an FSC report into SSL back in 2019. The FSC is the Financial Services Commission. Now, they regulate the securities sector, including all brokerage firms like SSL. Now, that report raised serious concerns about SSL, including poor record keeping and not enough oversight. The FSC also basically said that they didn't believe the financial statements that SSL was sending them. They called them questionable. And apparently, the same concerns were raised in a similar report 3 years earlier in 2019. Now, here's the bombshell. It says here in the report, based on the company's financials between March and May 2019, there was a significant shortfall between the liquid funds held in bank accounts and client funds held in cash. That's funds not yet invested. So what does that mean? Well, the liquid funds refer to SSL's own money, the money that they use to run the company. And client funds, well, that's money that clients give to SSL to invest. But what it's saying here is that over $1 billion of client funds actually weren't invested. So the FSC raised the question and wrote, this would suggest that client funds held in cash by SSL were used to fund its daily operations. Now, that's a big no-no. You can't be mixing client funds with your own money. If I give you some money to hold for me, you shouldn't be using that money to run your business, because when I need it back, what happens then? And if SSL was indeed doing that, that's a major violation. Now, SSL denied that that's what happened. They claimed the numbers were off because they had just switched to a new operating system. But it seems the FSC wasn't quite buying that excuse, because they pointed out that SSL switched to the new system in January, but the financial statements for January and February didn't have that issue. So how come all of a sudden, March to May, there's this discrepancy? So the FSC issued a directive for SSL to verify that they're not mixing client funds with their own money. And according to the Finance Minister, Dr. Nigel Clarke, SSL did comply with that directive, and the issue actually was addressed. But I just want to point something out here. This is why it's not good to have money sitting in an investment account uninvested. The whole point of an investment account is to invest money. If it's just gonna sit there, better you keep it in a savings account where at least you'll earn a tiny little bit of interest. And I'll even say this. A few months ago, I had some uninvested funds sitting in an investment account. I had sold some stock and I forgot to move the money out of the account or reinvest it. And guess what? I got a call and an email from my broker saying, Mrs. Reynolds, you need to invest these funds. We're not allowed to keep money uninvested beyond a certain period of time. And if you don't tell us what to do with this money now, we're going to invest it on your behalf in something low risk. So back to SSL, the FSC told SSL to eliminate that $1.1 billion of client funds that weren't invested, put it where it belongs, and don't mix it with your own money. Once again, I'm Kalilah Reynolds. For more information like this, make sure you follow this page and subscribe to my newsletter at KalilahReynolds.com/newsletter.